What are people telling you here?
Hey, good morning, Rich. Bank Indonesia Governor Agus Martowardoyo says that the slowdown in China may damp Indonesia growth for this year. The central bank sees a percentage point decrease in China's GDP will cut up to 0.6 percentage point in Indonesia. Yet Bank Indonesia is still optimistic growth in 2015 will remain on target, though it could be at the lower end of a 5 to 5.4% range. Martowardoyo also says that Indonesia's GDP growth in the second quarter would likely remain below 5%, more or less the same as the first quarter of this year. He says that demand ahead of the holiday at the end of the Muslim fasting month is not quite strong yet because budget disbursement and corporate performance is quite depressed. In January through March this year, Indonesia's annual rate grew below target of 5.2%, reaching only 4.7%. And this is the slowest rate in more than 5 years. In the meantime, a research report from UBS points to Indonesia, among others, as one of the market to avoid citing exposure to China is one of the reasons. And UBS say they want to avoid being in markets where revenues are driven by China or a levered domestic economy, while the cost of equity is driven largely by U.S. rates. Yet Vice President Yusuf Kala is convinced that the second half of this year will be better as the government takes steps to improve people's spending power, domestic consumption, including government's budgetary fund. And Kala pledges for the government to spend more to stimulate growth, even if it means widening the budget deficit in the short term. That's all we have for now. Back to you in Hong Kong.